Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of $86,234. That's made up of the $50,665 in my stake portfolio and the $35,568 in my Vanguard portfolio. Having a quick look through, you can see it's been a great week for investors, which is what I'm going to be covering today on how the recent US election is affecting my stock portfolio and how it might be affecting yours as well. As you can see, the overall S&P is up nearly 5% in the last week, and even if you have a look at the last year, it's up nearly 37%, making for an extremely successful year for many investors in the market. But this has also led to increasing prices of many stocks and people worrying about a bubble. But having a quick look through my holdings first, you can see there is one change that's happened since my last video, but everything else is still the same. I used to actually be a shareholder in JP Morgan, and it was a bank I held for a very long time, but I actually just recently sold out of it. So if we have a look at JP Morgan, you'll be able to see the recent run up that the stocks had and the just opportunity cost I just actually missed out on. So you can see in the last year alone, it's up 63.75%, and in actually the last week, it's up 6%, but that is because of the 11% jump that happened here, all in one day after the US election. I actually sold my shares the day before, so I missed out on this completely, but it has since traded down a bit and corrected, and is now up 6.3% in the week. I sold, I believe it was $1,200 or $1,400 in JP Morgan, and I decided to put that money into Google. So after that sale, I put it into Google, and you can see Google's also had a very strong week, up 5.56%. So whilst I might have missed out on that quick jump in JP Morgan stock, I pretty much made it back in my Alphabet position, which was good to see, so I wasn't so sad after all. You can see now my total equity is sitting at $3,017, and I'm up around 18% or $450 with an average share price now of $151. Google overall, compared to the other tech stocks, has had a good year, 35% in the green, but it still trades at only a PE ratio of 23, which is lower than majority of the S&P 500 and is lower than all the big tech stocks. The reason why I decided to invest in Google was because this was a position I already had opened, and the two positions I was looking at going between was Google and Amazon. Either one of them, I think you still would have done a good choice, and I still own my Amazon position, which is sitting at around $1,700 in equity, but I decided Amazon has shot up a lot recently. If you have a look at the last year, it's up 46%, so even higher than Google. And I was kicking myself for not buying down here in start of 2023, but I did grow my position in Amazon recently, and it is bigger than what my Google position was. And yeah, again, it is trading at a forward P ratio of 44, so a lot more expensive than what Google is. But overall, I'll continue to track this decision and see if it was the right one I made. But I did also lock in over 70% returns on my JP Morgan stock. So it was an extremely good investment for me over the last year. And with that money, I got dividends as well from the stock. So yeah, it was really good. And I decided to take my money whilst it was there. Another one of the reasons why I did sell out of JP Morgan as well is a lot to do with the interest rate side of things. Again, I'm not a trader or anything like that, but long term, I do worry about the bank's balance sheets. They are holding a lot of impaired assets on the balance sheet with a lot of these mortgages, a lot of these commercial properties, things like that. And I think long term, my tech positions are going to outperform what JP Morgan is likely going to give me. And if you have a look at the analyst ratings for it, it is still looking pretty good with a 70% buy and 3 hold. But it looks like a lot of the growth is already priced in, whereas Google, there's a bit more upside hopefully, but it had a very strong results recently as well. And again, Nothing bad about JP Morgan. I held it for a decent amount of time. If I was to hold a bank stock again, it would probably be JP Morgan. But I do get exposure, or a lot of exposure, to banking stocks through my Vanguard portfolio, especially here in Australia. So I'm not too worried about the sale. And when we have a look at Google stock again, you can see pretty similar with the ratings, with 14 saying buy, 5 saying hold. But there is still a lot of upside potential, as you can see, if you go off what the analysts are saying. And again, it had a good earnings as well, with Google Cloud beating out. I did do a video just last week, or 5 days ago, going through all the big tech earnings, which was a lot more in depth. So if you wanted to go through that, the likes of Apple, Microsoft, Google, Amazon, just go watch that one. It's a bit of a longer video, but yeah, I dived into all the big tech earnings. Another thing I wanted to speak about was how my US stake portfolio is now, for the first time ever, broke $50,000, which was a pretty big accomplishment for myself. Granted, I do have my other stock portfolio as well, but just for this one to hit 50,000 is pretty good. It means I'm halfway to the $100,000 mark with just this portfolio alone. And this is a lot of this recently, especially the last year or two, has been on the back of growth. It's not been on the back of deposits. A lot of my deposits have actually been going to my Vanguard portfolio. So a lot of these gains are actually just growth from the stock market. In the last week alone, or 5 days, I'm up pretty much $2,800 with no deposits in this across the portfolios. So that just shows you the strong times you can have with investing. Keep in mind there are also negative times. I think a lot of investors in the last year or two have gotten quite lucky with how things have been. Everything's kind of just trading it up. But I also remember I still have the videos on this channel as proof for times when I was down over 20%. And again, I had similar holdings that I have now, same philosophy, things like that. It's just the market was down and I was using that time to buy in more into stocks I believed in. So I don't think you should get too high on the highs and too low on the lows. But when it is green like this, you just gotta be happy and take your money when you can. So very happy to hit 50,000. And now I guess the next goal for this portfolio would be 75,000, but that is, again, a long way down the line. That's probably 2 years in the future, maybe 3 years in the future if I want to buy a house as well. And the other goal with my stock portfolios is to get this closer to $50,000 as well. So I can kind of have both of them, a nice balance. My Vanguard portfolio is a bit more long-term, a lot more stable, only 2 positions. They're both ETFs. And my stake portfolio is, when you have a look at the holdings, it's a bit more tech orientated, but it is still 52% the S&P. So again, I don't think I'm some expert investor or anything like that. So I do want to get the S&P because over long periods of time, it's very hard to beat the market. Having a quick look, I have 2 articles here about these stock surges as record highs as the US changes presidencies. The first one just goes through and shows that all 3 major indices were record highs. The Dow 3.57% up, S&P 2.53, and NASDAQ 2.95. And then even some of the shares that were linked to Trump, like Tesla, obviously with Elon Musk. So if we have a look at the Tesla share price, you can see what they're talking about. It shot up like a rocket. Here it is here. If you look at the last week alone, it's up 33%, which is insane. So I'm sure maybe potentially people weren't pricing in people were pricing in extra risks with another party, like the Democratic Party, and now with his close relationship with the Republican Party, let's see how that affects the stock. Again, I'm not someone who wants to trade off short-term stuff like this. I actually was a Tesla shareholder if you go back to some of my really old videos, and I sold out of it for a very good gain back in the day. It was around here. I pretty much timed it. I didn't even mean to, but I timed the peak of the market, took all my money and invested it elsewhere, and it worked out very well for me. But I guess there's some Tesla investors who have been holding this whole time, so it's probably good for them seeing these positive moves in the stock price. US stocks rallied sharply after the close to record highs on Wednesday after the Republican Donald Trump won the 2024 US presidential election in a stunning comeback 4 years after being voted out of the White House. All the indices were up, with investors expecting lower taxes, deregulation, and US president who's not shy to weigh in on everything from the stock market to the dollar, although fresh tariffs could challenge in forms of higher deficit and inflation. So the Republicans win powered a rally on so-called Trump trades, sending the US Treasury yield sharply higher, with the benchmark 10-year note hitting a 4-month high of 4.479. Bitcoin also hit a record high of over 76,000, and the dollar was on track for its biggest one-day percentage gain since September 2022. So that's another place. If you're a crypto investor, you've probably been quite happy recently. I personally don't have any exposure to crypto, so I'm a bit blindsided at times, but it had a very good jump, I saw, for those investors, so I hope they're happy. But even just if you look at these charts, you can see all the different yields. So you can see the US dollar really strong, which is not nice for someone like me who's putting Australian dollars into it. I want my buying power to be as high as possible, because it hurts when you're trading $1 Australian for 150, or $1 Australian pretty much only gets you like 66 cents or whatever the case is of USD, which is quite painful when you transfer it across. And the US 10-year Treasury yield also went higher. Bitcoin, as I was saying, jumped, and the S&P went up to all-time highs as well. So having a quick look at my Excel spreadsheet, someone asked for it the other day. It's just something I quickly made. It's really not, I don't have a template or anything like that. Maybe one day I will do that, but it's just a very basic spreadsheet that I just made myself. And you can see here is all the stock prices and the stocks. I deleted JP Morgan, added to my Google position, and you can see S&P still takes up 52%, so it's by far still the biggest position out of all my portfolios. And then you can see Google is at 9%, Microsoft, Apple, there's Amazon, and Costco. Costco also had a good day today. I'm quite sad that Costco is only a smaller position. I do believe in it a lot, but it is quite expensive. Its PE ratio is higher than all the big tech companies. When we look at my Australian portfolio, nothing's changed. I have been growing my international shares ETF, so that's around, I want that to sit around 60% and my Australian to sit around 40, because I still get exposure to Australian shares through my super and my retirement stuff, things like that. And then here's just a little bit of a graph. Obviously it hasn't been updated for today, but from the end of last month, just to kind of put it in perspective and show you how the stock portfolio values have been climbing over time. And if we have a look at dividends, again, I'm not a dividend investor, but I like to track things just to see how it looks. And you can see last month was obviously the quarterly dividends I get from Vanguard, and then my VOO one, so it was a very good month for dividends. This month will be a lot smaller, which I don't really mind, but it's always nice reinvesting those dividends that I get. Overall, this was just a quick update on how my portfolios are looking, especially after the recent US election. But it's good to hit over 86,000, and I think I'm well on track to hit 90,000 before the end of the year, which will be really good for me. I've also started a newer job, so I'm getting a bit more money as well. So when those paychecks start coming in, I'll be able to keep investing, and hopefully I can hit 100,000 by early next year. Thank you.